Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news equity market investors are waking up to the risks inflation will have to asset values. But first in the US, there was more evidence overnight of a strong jobs market, with job openings reaching an all-time high in the latest March data. Perhaps a reflection of the much better job situation, Americans are paying off their credit cards at the fastest rate in years. But their federal government isn't following suit. There was another very large US Treasury debt auction overnight, this time for their 3-year note. It was well supported, raising $89 billion from a $171 billion bid. US retail sales in early May are still showing positive gains year on year and good gains on a month-on-month basis as well. In Germany, economic sentiment among businesses improved markedly, reaching its highest level since 2000. That is not to say that current conditions are great, but the expectations they will improve sharply there as the pandemic fades is strong. And in an eagerly awaited release, the official 2020 census data was revealed for China yesterday, claiming a population of 1.412 billion and a tiny rise from 1.4 billion in 2019. Others suspect it actually declined. In any event, it's a turning point for their population. Their fertility rate dropped sharply, however, in 2020, 22% lower than in 2019. Only 12 million babies were born in 2020, down from 14.7 million in 2019. And China's producer prices jumped again in April, up a fast 6.8% year on year from a big rise in March of 4.4%. In the past, the flow through to consumer prices wasn't that strong, but this time is expected to be much more direct. And the expectation of an impending sharp rise in inflation is behind today's sharp equity market retreats, as markets start to realise rising yields will mean lower asset valuations. And in Australia, their 2021-22 budget was released overnight, and it's aggressively expansionary. It ratchets up a lot more federal spending than expected, risking an overheat situation, and possibly earlier RBA rate hikes than currently anticipated. The US Treasury 10-year yield starts today at 1.62%, back up 2 basis points from this time yesterday. And the price of gold starts today at $1,835 an ounce, and that's down $2 from this time yesterday. Oil prices start today still at just over $65 a barrel in the US, while the international Brent price is just under $68.50 a barrel. And the Kiwi dollar opens today at 72.7 US cents and a little lower overnight. Against the Australian dollar, we're little changed at 92.7 Australian cents, and against the euro, we're lower at 59.8 euro cents. That means our trade weight index starts today at 74. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.